Hey, greetings everybody, it's Jeff Scott. It's Sunday morning, a little bit before 9 o'clock. Sorry, it took me a while to get this out. I thought I'd get it out last night, but we had a little bit of a issue with my little puppy. Not my old puppy, he's 14. This is my view from my new porch that I'm building in Santa Fe. Pretty cool, eh? It's what I did this year with my winnings. Bought a nice piece of property. Let's go ahead and start. I titled today, Markets Trickle Higher into Double Tops. And it is the 16th of 2020. And my name is Jeffrey Scott, and it's hgsidoc@gmail.com. Disclaimer, as always, this is for educational purposes only. Anything I recommends in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. No one pays me to say good or bad things about anybody's tools. And I've paid for all the tools that I demonstrate, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I'm not going to spend much time here except just to emphasize this first line. Be your own guru. Find what works for you, study it, get good at it. You can combine different influences and turn it into what works, again, for you. So I like to call what I teach when I teach people is to be your own guru, is to show them some of the influences that I used to come up with my style. What works for me doesn't necessarily work for you, and you find out what it is and get good at it. I own a lot of different programs, but frankly, I can really strip things down. I need TradeStation, Thinkorswim, and their indicator sets, whether it's from Sagar with his Q tools, whether it's Roy Kelly, whether it's the things I wrote to mimic some of the Hgsi, John Persons, etc. When I analyze the markets and industry groups, I usually go right to Hgsi. I think it's the best, especially after hours, full-fledged program. EdgeRater, Q tools, and Dr. K's tools. From time to time, I may actually introduce you to somebody who makes tools that I use, and it's important to recognize that no one ever pays me for that, and if there is an affiliate fee offered, it gets applied to you as a discount. Here's the website for Hgsi. Investing strategies here, free 30-day trial, and I highly recommend it. Under investing strategies, you'll see hundreds of videos. Where are we in this market? Gosh, we're at a double top land. I really feel like we're back in this circle. Last week was a relatively flat week, better for value than growth. Rates came up a little bit and bonds sold off, so we know, sold off a little. So we know that markets don't go just straight up. But are we getting ready to roll over? And if that's the case, do you want to start thinking about some more protective strategies? Now, I'm a broken record. I've said this multiple times. It's like you, I'm still waiting for that to happen. It really hasn't happened as of yet. It'll happen someday. Just hasn't happened yet that we'll have a sell-off. And I guess people feel the Fed's still propping it up and that they have no risk. As you'll see, I've gone a little bit more defensive, or I continue to be a little bit more defensive, but trying to still make more positive returns. Sector report. Utilities looked okay last weekend. Look at how they ended the day on Friday. Just horrible. That's probably the weakest group on the board, but it's a mixed Friday at best. Now let's jump quickly into Thinkorswim and look at the major markets plus, see if we see anything. We'll start, and I look at the futures here, capture to me all the information. So, one thing that I like to look at is where have we come from, where we're going, try to get a sense of what this market's going to do. I'm just looking to see if there's something here I can do better. Hi. Yeah, I guess that's not what I want. Never mind. Never mind, let me go back here. So if you look at the S&P 500, and let me just change that to, hold on a second, studies, drawings. If we look at the S&P 500, it peaked back here in February, dropped to the low in March with a reversal, and we are almost back to where we were. The 33.9750 was an all-time high. We closed at 33.6375, so we're within 1% of all-time highs. We are close to what one might consider a double top. I guess it's only a double top if it pulls back from here. If I look at the NASDAQ, you'll see that we've already taken out the pre-correction highs, and we're at all-time high space, but we're clearly going sideways on the NASDAQ. If we look at the Dow futures, has had a nice breakout above the moving averages. We got our golden cross, and so all the moving averages are above the 200, but we're going sideways here, well below the prior high. If we look at the Russell futures, looks a lot like the Dow futures, don't they? Starting to get a golden cross on the Russell right there. Guess we're still about a few points away. Pretty close to that double cross, if we're not, the golden cross if we haven't had it. Again, a little sideways. This is just a flag before we go higher. That's possible, but you would certainly expect at some point to have some type of a retest of this 200-day moving average. If you want to see weakness, we can look at the VIX. The VIX continues to slowly move lower, but notice it's still higher than it was prior to the run-up in February and market collapse. And then lastly, the dollar sort of bouncing around here. The downward momentum seems to have abated, but it's now going sideways at a much lower area. So that's my first look at the markets. We'll look at it a few more times tonight in different programs. For those who know me, know that I'm very much dictated by what the market says, more so than individual stocks. On the weeklies, you really can see the double top forming here on the S&P, and that might be something to watch this week. Now, underneath, rates rise off of record lows. We had you can't see it well, but there's a little spike on both the 10 and 30 years rates this week, and I think we saw bonds sell off some. The AD lines, this is the small stocks. Notice that the Russell 2000 versus the Russell 1000, that the 2000 in red is still lagging. We are still below the prior high on the AD line on the Russell 2000. Yet we've broken out to new highs and approaching new highs on these prices on the big stocks. So AD lines are leading higher for both large and small, but large stocks are continuing to lead. NYSE, by my vision, I don't see us at new highs yet, but look at here at what happened to the bonds with the interest rates going up, and you can see the TLT rolled over a bit. Breadth remains strong. In fact, stocks above the 200 and above the 40-day are higher, but interestingly, we sold off of an overextended 2121. As I said last time, sometimes you can go sideways, and that perhaps the 2121 would be influenced by the fact that we have a lot of stocks that are still below the 200-day moving average and above the 40, and can those stocks really be extended? And you're looking at 3-week or 3-month new high, new low, so stocks could have a new high since that bottom in February and still be way below their prior highs. Now, on the McClellan oscillator, I think we're starting to see some clear divergence. We've probably been seeing it for a while, and is this flashing a warning? I see divergences on both the daily and the weekly. What else do I see? My buckets. This is something that Ian taught us decades ago. Take all the stocks in the S&P 1500, put their Bollinger Bands on, and ask, the first question is, what percent are above and below the midline, 78% above. That's still a very bullish feel to this market. It was 83 on Monday before it reversed. And look at the number of stocks above the Bollinger Bands, over 30% back on the 10th. So perhaps it's not a surprise that some of the leaders gave up something this week. And you could see we've moved off of these overbought conditions. No Hindenburg omens on either the NYSE or the NASDAQ. As we reapproach old highs and set new highs, this will become more of an important thing to watch for. And for those who have not been with me before, the Hindenburg omen is sort of a folklore thing. It requires a number of signals to occur. Typically, it's looked at on the NYSE and the NYSE comment at that. And when you see a Hindenburg omen, you pay attention to risk of a correction. When you see multiple, that's when big corrections have occurred. Market tone, this is the Woody indicator. This would be down here, continues to be green. And notice how that extreme volatility that we saw earlier in the year has seemed to have bled off. And now the markets are, frankly, much more calm than they were prior to and after the sell-off. Sector strength. This is one of the Q tools. This is probably my favorite, quote, indicator, end quote, that sits on my desktop during the day, because it gives me some interesting things. Like, for example, this is updated today or yesterday at 11:18, so this is weekend. 8 out of 11 groups were positive on Friday. On Thursday, only 2 out of 11. For the week, it's 7 out of 11. So this is 2 day, this is 1 day. And so last week, if I go down here, it was 11-0. So the markets have weakened a bit. Okay. Now that's interesting. Why would this say 7 and 4 for the last 5 days? Oh, because it's going back to here. Now, this is the part that I pay attention to. This gives me the individual AD line for either 1 day, 2 days, or 5 days. And this looks at sectors, and you could see how sectors are actually improved from Thursday to Friday. Industry groups, you still got 45% of them that were negative on Friday. And stocks, although improved, you're almost at 50-50, where half the stocks in the market were negative on the day. So this is not, by any means, a rip-roaring bull market right now, and it's got its cracks. Canaries in the coal mine, well, they're not cracking, even though they gave up some of their gains at the end. On Friday, they had new closing highs all time. That's a pretty big move. So this pullback here was a pause to refresh and a move up. And they are up off the bottoms 132% in 104 days. 1% a day, 1.3% a day for the Canaries. A pause certainly would not be shocking. They continue to be leaders. Now, this is the group performance analysis tool in HGSI. I run this frequently because it gives me a sense of what's working and what's not working. So if you look at the top, if the best performance to the long side was if I took the shorting candidates and I bought them, there's a problem there. So 4.5%, my buys were up 2.9, my filtered buys. So leaders did okay, pullbacks seemed to do okay. Stocks and groups to the downside, short-term negative earnings growth. This really was a lot of junk off the bottom. The S&P 500 on the week was up 0.6, and if we want to find growth, you got to go further down. And let's see, we got IBD 85, the weekend review was down 0.8. The IBD 50 was down a little bit over 1%, and my base holdings on the week were down about 0.7, which was similar for the market spin. So not a great week for growth. It's hard for me to win on these weeks where junk leads because I just don't buy a lot of junk. Know your news and earnings. News has been big lately, and if I look at this very quickly, housing starts on Tuesday, FOMC minutes on Wednesday. God, it'll be hard for me to believe that anybody's going to say anything but we're going to prop up. That's certainly the belief. The jobless claims on Thursday will be important as well as PMI and homes on Friday. So I would say a mixed news schedule. I guess since the Fed minutes, probably a little bit more than mixed. On the right, you see the earnings for the week, a little bit less busy than last week, but there's still some big stocks there. Walmart, C Technologies, two things that are SE that I own. Target, NVIDIA, boy, that's been a runner, hasn't it? Lots to like up there. As it says in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So my thoughts, the S&P was flat on Friday, although it got close to all-time highs. You can see the Dow was up a bit. The NASDAQ and the Russell were marginally lower. Another positive week for the markets. Benchmark gained 0.6, the S&P 500. Dow Jones up 1.8, Russell 0.6, but the NASDAQ only 0.1. It's pretty clear that news will continue to batter the markets, whether it's COVID, POTUS versus Pelosi on additional stimulus, China. This weekend there's also some issues about Iran. The politics, now that we know Kamala is the VP candidate, I think that rhetoric's going to go up. Back to school debate. Boy, that's a tough one. I'm so upset that they've made it political. Imagine you have two people that have to work in a family. What do you do with your kids at home? Or, you don't want to send your kids to school. What about the teachers? That's not political. That is emotional, and that's a tough one. Double tops on major indices, certainly the S&P 500. That's something that I find not necessarily concerning, but I think it's not it's not something that should be ignored. Despite news flow, markets continue to be backstopped by a submissive Fed. As long as rates remain near zero, markets may continue to slowly grind higher. That's my guess. That said, corrections happen. We are in August. We're in the neighborhood of double tops. My portfolio took a bit of heat this week as growth underperformed. As I've been on the past few weeks, I have some protection, but have also taken some profits. I'm in the process of building a mountain home, so keeping my powder dry. Not drive. Probably spell check. If you put just a totally wrong word in, but you spell it correctly, it doesn't pick it up. And I'm still up over 100% on the year and want to end the year even higher, but will likely be a little bit cautious here. You can see NASDAQ's leading up 22% on the year. It's retaken prior highs. S&P is up 4.4, and the Russell really has made a comeback as it was down like minus 22% just a few weeks ago. Doing a typical top-down review. Let's go into some charts. So very quickly, let's go look at TradeStation. These are just, this is a view, combination view, but it's got a lot of the Q things in it. And I just wanted to point one thing out. And it's caution, although it doesn't mean the markets have to sell off here. This is the spiders. This is the Qs. This is the diamonds. And this is the Russell. They're all going sideways this week. All right. This here is what Sagar refers to as the outer boundary. It's a band. And it's a band that often stocks reverse at that band. Notice that the spider is above that. The Qs ran up to it and have gone sideways. The diamonds are above it, and the IWM is at the top. So that's extended. If you look down here, you'll notice that Roy Kelly has got his little red line occurred earlier in the week with his cycle top. Again, a sideways move, it can be enough to burn off some of this excess enthusiasm. Certainly not my enthusiasm by my voice, but a lot here that says we're tired up here, and maybe a sideways move would be not welcome, but a sideways move would be okay. Let's just very quickly do my future review in TradeStation, my 6 points that I look at every time. Are we in a buy or sell signal from John Person? That is a buy, daily, weekly, and monthly. What color are we? We turned blue. Blue is sort of a neutral color. It's an Elder Impulse indicator. I can be high or I could be long or short here. It's still green, it looks like, on the weekly and the monthly. So that's a slowing down. Notice these red dots here. These are evidence of MACD divergence. Look at how we've gone higher highs on the stock market and lower highs, hardly even breaking positive on these higher highs on the MACD, suggesting less participation, more risk of at least a pause to refresh. If we're in the middle of the envelope, so we're not extended, when we get below it or above it, we have a tendency to break back into it. And it didn't stick. Let me add my new high jump here. I don't expect on the E-mini with this picture to see an issue with the high jump, but we'll see where we are. Come on. So it's when I look at the new version, remember the old version, which I'm sunsetting, so let me just kill it. The old version went from 0 to 100. I'm running it now from minus 100 to plus 100. When we get to periods of time like this, where it gets above this 95% line, one looks for corrections. Above the 95% line, one gets looking for corrections. We're not seeing that right now, as we are at 67.82. And then I look at this thing here, which is my bongo, and it's still green in all three time frames. I'm especially looking at the weekly, which to me is most meaningful. The others are whipping back and forth pretty quickly. All right, so my assessment then on the S&P is it's getting tired. The NASDAQ, buy, blue. You notice that after the MACD divergence, you had a little bit of sell-off, green, and 75. Nothing different there. Dow, still green in buys, but it's got the MACD divergence, not at the high jump, and the Russell. So not a whole lot from here to change my story or my level of conviction. The dollar, notice it had some bullish convergence. So it's getting lower and lower, and I guess the MACD didn't get to the same negative amount. So this is what you see before a bounce, but it can go on for quite some time. Gold sold off some this week. Notice that gold had ran into its high jump. Doesn't tell you when you're coming over, but it just tells you that you're getting overstretched. All right, let's look back. Now let's go into HGSI. Market analysis groups, major markets plus. Let's do a top-down view. And let's just make sure we're ranked by that. There's 27 things. So, strength in the market on Friday. Dow Jones Industrials, transports, up at the top. Small stocks, NYSE, small cap, Russell 2000, IBD in the middle, two different IBD ETFs, gold and volatility, the dollar down on the bottom, and then really lagging was biotech. So not a typical strong looking week for high growth. Let's take a look at some of our favorites in HGSI. We'll look at the major markets, the dollar, the VIX, and the metals. Okay, so I did put fibs on this. You could see we ran right up against the fibs and we failed. The fibs are at the prior high, so we are very close to a double top, or had a double top in the S&P. It wouldn't shock me for us to fail at this double top. And then the nice thing is we got the 8, the 17, the 50, and the 200-day moving averages right below it that might act as potential support. So if you have a lot of cash to bear in the market right now, and a lot of you probably do, I know there's a lot of money on the sidelines, I might be waiting for us to break above this 200-day moving average before I commit a lot of new cash to the stock market. And here we are off the top on the high jump. So that's the S&P 500. The Dow Jones Industrial, nowhere close to the prior high, which would be back in this range over here. Nice steady up move. You know, a little bit of a pause to refresh here. Nothing on this tells me it can't go higher. The NASDAQ, the leader of the pack. In fact, if we wanted to play the Fibonacci game here, we are already sitting at the 138.2%. So, you know, if you believe in Fibonacci's and things like that, we have paused at what would be a natural place for this market to top out at. So again, is it reason to sell everything? No. But now I've got to think about, is this mark here something that I need to be careful of? And I'd like to see it break above that before I commit more money to the market. And then lastly, the Russell, which has really been moving strong of late, broken above its moving averages, also a little bit of a flag move. Now, break out of this flag would be very bullish, wouldn't it be? Long ways to go before a double top there. If we look at the IBD 50, two things. Here's the IBD 50 ETF, and you can see it actually pulled back on the week and went sideways, pulled back the prior week and went sideways this week, although it was up from the Tuesday lows. And the IBD breakouts actually had looked better at one point, look about the same. And then let's look at the dollar. As we talked about, it's going sideways down here. This here is the chandelier stop. That might be an entry if it broke above it. In fact, in Thinkorswim, I have a scan that looks for stocks that have a new buy signal that broke above their chandelier. If I look at the VIX, continues to fall, but it's above its prior resting area. I think we looked at the dollar, but again, dollar going sideways here. Gold, if the dollar has stabilized, what we expect gold to do, and gold had a reversal bar here and is sold off. Now it's sort of doing this, and it'll be interesting to see if, or even like this, whether gold can break up to the upside as many people think it will. A lot will depend on, obviously, the dollar. And then silver, similar to the gold, sort of sold off and going sideways. And then gold miners. Of interest over the weekend, some of the major hedge funds came out with what they were buying and selling. And Barrick Gold, ABX, actually popped after hours because it came out that Warren Buffett took a big position in it. All right, so once I've done that, I want to go into industry groups. So 07, I hit warehouse view, and I'm going to set it at force up. So first thing I notice is that I've got 53 groups to the upside. I've got 24 to the downside, so that is bullish. If I look at a 5-day window, I've got 70 and 28. So if I look at industry groups, just like the sectors that I showed you, more bullish than bearish. If I look at what's 2-day down, just get a sense of what's not working short term, look at healthcare, medical devices, specialty pharma, healthcare supplies, large pharma, life sciences, and then generic pharma. So you have like 5 healthcares in the top 14. So healthcare had a tough last couple of days. What's missing there is biotech. So biotech continues to perform well, mostly because of news. So let's take a look at this. Highest rank there is biotech. Right click, change index group. Mesoblast, this is a stock that, this is the joy of biotech. So the stock had a big run up into what's called an FDA hearing. Then prior to the FDA hearing, notes come out from the FDA, and this is not the approval decision, but they put a sort of like a jury of peers, of scientists, of ethicists, of lay people, who then review the data and decide whether or not a drug is worthy. They make a recommendation, and then the FDA typically will listen to that recommendation, but is not bound to it. So prior to the meeting starting, the news comes out, the FDA's comments, and the stock pulls back. And then what happens? They get a positive vote, and the stock moves back up. So this is almost, these are 18 down to 10, back up to 18. Those are the kind of things that mess up your gut. But this is why biotech is fun and not so fun at the same time. So Mesoblast is a news story. Their drug is a relatively modest opportunity, but I'm sure they're going to price it really high. Novavax, I think they did a deal with J&J as the week went on, one of the vaccine leaders right now. You know, God praise that some of these guys work and that these guys save the world. The company is going to start to make a whole lot of money here. The company's never made any money, so if they're really bringing in $2 and then $6 per share, $8.16, if that's can double for the year and go from what's sitting there $8.47 and do $16, $17 on the year, they're trading at less than 8 times a multiple of forward money. Maybe this is undervalued. I'm going to have to think about that one. Moderna, another vaccine play. We don't know if any of these are going to work. We certainly don't know which one's going to win. Sitting on its 50, probably more opportune buying point. Komodo is an Israeli company that's been building some therapies based upon antibodies from the blood of prior recovered patients. You know, who would have been buying it here? Not me. By the time the news came out, it's probably too late. It's already popped. Phoenix, don't know anything about it. That looks like it's a potential takeout. And then the biotech index. So clearly, biotech being driven by news. Now, exploration production is number 2 on the list. And you know, this is sort of a quiet sideways base here for months and a little bit of a move up, flag, and a move again. This is Range Resources. I put this on my buy list. It also is in a high closed doji environment where that's another favorable type of a thing. The weekly bond goes green. You know, I'm not buying them on the fundamentals because the fundamentals stink. But I'm looking at this on the basis of its technical pattern. If I look at EQT, here's another one of a fracker or shale company. Comstock Resources, a little bit more loose. Marathon hasn't broken above the 50 enough yet. So are those great stocks? No. But should we think about having a little bit of energy position? Yeah. And you pick which one you want, but I bought Apache a couple weeks ago, and I'm probably going to buy some Range Resources this week. Electric power equipment, boy, I hope you guys took my pick here. Notice that the index is greater than the stock, so I probably wouldn't go too deep here. GE, not my kind of play. This one was. Was this not a great pick or what? I gave it to you back here when it broke above 100. And then I remember the next day it broke up here. It's like, is it too expensive to chase or not? I chased it. I hope you chased it as well, because it's gone from 110 or so that day up to over 170. I know some of you had. I've heard some comments. It had a scary day here on Monday where it looked like maybe this is over. You can see the candle here, hammer, but it recovered the rest of the week. It's a good season for Generac. I don't pay attention to high close dojis after a big run up. It makes money. It's a season for Generac. What can I say? It's hurricane season. Department stores, talk about junk off the bottom. Eventually, these are going to be great values. I'm not buying these because I don't know how to buy them down here. I see very little momentum. If I look at the weekly, yeah, it's got a new person buy signal. Maybe it runs back up here. It's just not the kind of stock I'm going to play with right now. That's Macy's. Nordstrom, similar. Dillard's. Yeah, it's pop, but right into its 200. I've not been playing a lot of these return to work, to gambling, and so on and so forth plays. I do have a Caesars position, which actually turned positive. Casinos and gaming, right click. Now left click on this. Penn National, and I guess the message here is, a lot of these are regional ones. Penn National is clearly a regional gaming company. Boy, what a buy opportunity here. But again, you have to be buying these things that are questionable whether fundamentally how sound they are. You look at their earnings per share growth, and clearly they opened up because they opened up. That's why the stocks went up. As I mentioned, I've got some Caesars. It's sticking its head above the 200 here. Maybe it's time for it to run. It'd be nice since I only got a week left on my options. MGM failed at the 200. Maybe we're trying again. Red Rock at the 200. Most of those are smaller companies or regional players. E-commerce discretionary. Boy, last week this group looked great, and then looks what happens. Fetch or Farfetch, I don't buy shooting stars. That's a shooting star. That's the kind of thing I expect to drop. If I'm proven wrong, if it goes higher than a failed shooting star, it's probably pretty bullish. It's had a big run. Wouldn't surprise me that it's time to pause. Mercado Libre sold off Monday. This stock has been a monster, but you look at the fundamentals and you scratch your head why. Revolve Group, I know another stock that had a big run up and sold off. Red candle high at the high jump on Friday. Netflix, probably the least exciting chart among the FANGs. Maybe one of the more viable ones, sitting right above its 50-day moving average. Hgsi, big run up, it sold off, consolidating here, great fundamentals. I might be interested in chasing this one. I might put that on, something to watch. Wayfair, boy, I still don't get this Chinese furniture play, but boy, all-time highs, and going sideways here is good. Set up perhaps another leg higher. And Baba actually had a not great week as it sold off when IQ, which it has a big investment in, is under some investigation from an accounting and other principles. eBay, is eBay like Netflix at a point to start thinking about it? If you look at the weekly, it looks like a flag and getting ready to break out, so you might want to watch eBay. All right, so I could go down all 10 groups, but I've got to go pick my little boy up. My dog had a seizure last night. He gets them every once in a while. And of course, mommy and daddy panicked, so we took him to the dog hospital. And I just got a text that I can come get him, which is good because those who have been watching me for a long time know how attached I am to my dog. He doesn't like to take a seizure medicine, which is probably what happened, but he was at the kennel overnight, and when we picked him up, he still had a lot of pills left. I did look at a lot of stocks and talk about some of the stocks that are on my buy watch list. And let's change this so I could show you industry groups. So there's quite a few industry groups represented here. Contour brand, this isn't apparel. I don't have a lot of apparel stocks. It does make money, but its earnings per share growth is negative. You could see the revenue took a hit with COVID. They make a lot of the jeans companies. I think they're Lee jeans and other things. When I looked at this in TradeStation, I was sort of impressed with the pattern. So the first thing is it's in a weekly buy, coming off a high close doji the prior week. It's running right up its trend line. It pulled back into the trend line, had a daily high close doji. Volume on the weekly, volume on the daily look okay. Weekly bongo's good. I think this looks interesting here, and I did want to have some exposure into the retail and apparel group. So this is the one that stood out for me. I just put this here. One of my better picks not too long ago was Digital Turbine, where it basically doubled on earnings a couple days after we talked about it here. Again, this is what I like. Uptrend, sideways, breakout. I don't have a whole lot of those to show you today. They just not here. I mean, I have things like Northwest Bank Share, which have kind of looked like the energy stocks that went sideways and now looks like it's starting to stir. The mobile breakout from the squeeze looks good on the weekly. 10X Genomics is one I gave you a few weeks back when we put the buy order in here. I'm looking at it again as an add to time. Mobile breakout from a squeeze, pocket pivot, kahuna, new person buy signal, all this on Thursday. And you know, when we bought it back here, we set a buy stop here, and it took out the buy stop. It didn't do anything, frankly, for a few days or a week. Never took out our stop, but by now it's taken off both of our targets. 103.63 got taken out on Friday. I think it looks interesting again, not without risk. Genmab is a biotech stock that has got some great drugs on the market that are marketed by other people. They get royalties. This one is pausing to refresh. I like Genmab. I'd be looking to buy it if it breaks out. I mentioned many of these already. Continental is just another of the same energy play. I just liked it in the past. You see it's had a big move off the bottom. Progeny is one that was a darling of some of the boards, and then when it broke out, it just gave a reversal and a flag, took out its weekly chandelier. Excellent earnings per share growth. Of course, you're paying for that with a crazy high multiple, but it's an IPO. That one might be interesting. Quidel, I'm not saying to buy it here. I'm saying to pay attention to it. This is still a great play. Look at the earnings per share growth. Look at the multiple. Look at it's under demand. It had a hard sell-off, already moved off the 50. Sometimes buying something like this on a pullback to free parking at the 50 is the thing to do. It would have been this time. Of course, that's when most of us sell it, when it pulls back, and smart people are probably buying it. Mobile breakout from a squeeze, but it's hard, again, hard to hold on to something that falls off like that. Scorpio Tankers, mobile breakout from a squeeze, person buy signal, kahuna. Yeah, I love the chart pattern. It's got a lot of resistance right above it. If it breaks above the 50 moving average and the chandelier stop, it could run all the way back up to the 200-day moving average, which it did back here, which would be nearly a double. Boring stock, Campbell Soup, long squeeze, and a breakout. Boring stock, pays a dividend, long squeeze and a breakout. Another retail play, Abercrombie & Fitch. It looked better, I think, on TradeStation. Let's go look at it here. What did I like about it? High close doji and a new buy signal on the weekly. Good good support back here. The problem with A&F is it's got resistance up here, which is not that far. That looks like it's at a little bit under 10. And the stock closed at, well, it can't be under 10, never mind, 11.5. So there's just limited room left. Although, again, if I want to find some of these beaten down retail stocks, that's another one that looks interesting to me. And then Floor and Decor, sideways move, and then some momentum coming in. I'll be watching that one. And Nautilus, great fundamentals, a story that makes sense, people buying fitness equipment in the setting of COVID and not being able to go to their gyms. When it seems like COVID's getting better, this will probably sell off, which is what it did this week. Still looks interesting to me and lots of demand. Now, those that are new to me are thinking, how can you have 40 stocks on a buy watch list? How can anybody watch those? Okay, I agree. So what I do is I stick them, among other stocks, into a radar screen. In that radar screen, I look at my Q tools. I look at some of my Hgsi signals, pocket pivots up, pocket pivots down. I look for Bible gap ups. These are ones that had gap ups, Bible gap ups on Friday. I can see what stocks have earnings in the next couple of days. And then the John Person signals. I use these to screen for stocks to go look at their charts. I am not an active trader. Shocking alert. What I'll do tonight is I'll probably put a couple conditional orders in, and then I will look at my portfolio during the day. Hello, TradeStation, resetting. Oops, we lost power on that. Yep, now we're going to get it back, maybe. I have this happen frequently with TradeStation, and it's coming back. But I'll have conditional orders put in. I'll look at my portfolio occasionally during the day. Yes, during COVID, I've had much more time to manage my portfolio during the day, hence my returns of over 100%. But I'm really happy to find stocks and stay with them a long time. And I have a lot of things that are longer term in my portfolio. If you say, but Jeff, I don't have TradeStation, how do I monitor those stocks? I say, not a problem. Do the same thing in Thinkorswim, where I could have put in a buy watch list. Just put the stocks that I currently own. Now, how could anybody own so many stocks? Simple. Technology helps me manage them and keeps me ahead of the game. Automated stops, but really using radar screens and market watch, so I could put a nice list in and be comfortable that as my signals come in, I can monitor that. And this is the buy watch. IMRN looks interesting. Why? Because it's triggering my pseudo vantage point buy, my one-day market rotation buy, and it's got a laggards RSI, so I might be just looking during the day and saying, you're in. All right, crazy looking chart, but it's just pulled back to support and looks like it wants to go again. So this is something I might look at longer. But the bottom line is I use market watch and I use radar screen to keep me in the game. This number here, the net liquid, is down because I bought that property and building my house. And this is negative because I have margin. That's part of how I get my gains, is I'm heavily margined, although I still have a fair amount of buying power left right now. Sometimes that'll even get close to zero if I'm all in on a bullish market. So the market is okay. I think that, just in summary, I'm going back here before I say goodbye. We're at a double top on the S&P 500. We've had a big run. We've had sideways moves over the last several days on a number of the futures. Here's the futures going sideways in this looks like daily charts of the futures. But look at what they did at the end of the week. They had an interesting move into the close on Friday. Look at the NASDAQ, a little bit of a run up right here. This was the bar in the close. In triangles. And that's what we saw at the end of the day on Friday, was back and forth within these triangles. But if I go back to the ETFs, you can see, are we topping? Are we pausing to refresh? We're certainly not in a gigantic major bull run right now. We could go back there. These are prior highs within the last week or two on each of the indexes. I think we'd have to take those out before I get bullish. On that note, I'm going to say goodbye. Thanks, everybody. Oh, just as a side, I know several of you have bought the one stock Roy Kelly radar screen tool and his cycle finder tool because you've seen me use it. I'm going to be posting to the board probably on Monday a series of videos that Roy made for my users, like I own you, for the users that follow me. Have a great week, everybody, and I'll talk to you next week. Thanks. Bye.